Welcome to the Group Dentistry Now Show, the voice of the DSO industry. Kim Larson and Bill Newman talk to industry leaders about their challenges, successes, and the future of group dentistry. Visit groupdentistrynow.com for more DSO analysis, news, and events. Looking for a job or have a job to fill? Visit joindso.com. We hope you enjoy today's show.
Welcome, everyone, to the Group Dentistry Now Show. I'm Bill Newman, and as always, we really appreciate you listening in today, whether you're on Apple, Spotify, or Google, or maybe you're watching us on YouTube. We really appreciate it. Without a great audience, we couldn't have great guests like we have today. So you may have seen these two at a DSO meeting. Maybe you actually heard of their group, Areo Dental. They just made, for the second time, the Inc. 5000 list. So we have Dr. Anushka Gaglani and we have Dr. Abhishek Nagaraj. So welcome both of you to the Group Dentistry Now Show. Thanks for being here.
Thank you for having us, Bill. We're really glad to be here.
Yes, likewise. Thank you.
And you are both co-CEOs and also co-founders. So it'd be great to kind of get your background. Maybe we'll start with you, Anushka, if you wouldn't mind. Maybe take us through, you have to take us through entire dental school, but maybe dental school to, the partnership with Abhishek, and then we can talk a little bit about Areo Dental Group.
Sounds good. So basically go back to when I wanted to be a dentist. I'm just kidding. Just a little story behind that. My dad wanted me to go to med school, but I'm a rebel, so I went to dental school. Essentially, I went to UIC. It's a long story how I got there, but I grew up in Florida, went to University of Illinois at Chicago, and then graduated. And I was honestly a little bit lost. There wasn't much guidance about, what kind of career I should pursue or where I should work. So I ended up in a very heavy Medicaid office, which played its role. I definitely learned a lot. My speed increased. But, as most dentists who work in a Medicaid practice will tell you, unfortunately, the quality of my work suffered. So it took some time to unlearn those habits that I developed over time. The first couple of years, again, was very heavy Medicaid. Then I went to a PPO fee-for-service practice as an associate. Probably about the third year in, I started to get a little bit antsy, and I was kind of like, okay, I need to look into starting my own practice because I had this vision behind it. I don't know that I wanted to really go down the path of multi-practice ownership, but Abhishek, when he moved to Chicago, we decided to open our first practice, and then we were like, well, there are two of us, so let's do a second one. And it just kind of became very interesting to us, and the business behind the dentistry became very, we like the challenges, we like seeing, practices grow, and more than anything, we like having a landing spot for new grad dentists and dentists maybe that were lost, kind of like I was, to have somewhere to go to get mentorship and develop their skills.
Abhishek, talk a little bit about your background.
Yes, thank you. I grew up in India, so I moved out the immigrant story, right? I was 24 almost when I moved out to the US. I actually went to dental school in India first. And, those 2 years were pretty hard. I actually went back and taught as a faculty member in India, and then finally when I had to move to America, it was probably one of the harder things to be able to do, the process of getting here. And then 2011 went to NYU for a 3-year advanced standing program to get my DDS degree, graduated 2014. Anushka had been practicing for about 3 years by then. I associated with an entrepreneurial dentist who actually was, in hindsight, my mentor, and worked with him for about a year and a half. And then Anushka and I decided that our vision was to elevate guest experience, patient experience in a PPO fee-for-service setup. I'd also had some Medicaid type practice that I practiced in, so we decided to come together. We were only engaged at the time, slightly risky in hindsight. We still opened our first practice at Burbank. And every year since, we've done one practice. We bought small distressed practices, updated them, expanded them into larger practices, hired associates, and grown these practices. We just opened our 6th one recently.
That's great. So you started in 2015?
2015 is when we opened our first practice together. December of 2015, so almost 2016, you can say.
Okay. And you talk a little bit about the practices that you're targeting. So you talked about buying some distressed practices. So you had your own practice. So the 2015, 2016 was your first practice. Second one, was it a distressed practice or was it okay?
It was. Do you want to take this, Anushka?
You can go ahead.
Okay, so the first practice we bought was probably we can consider this a startup. It was a practice that was barely had any revenues. Dentist was out the door. He was probably doing about 150,000 in revenues for the year, and he probably should have sold like maybe 5 years before that. He was well into his like late 60s. We took that over. A lot of people said, "What are you doing taking this practice? It's completely like run down." We were like, no, I think this is a challenge. So we took it on and then grew that practice to over $1 million in our first year. And then that's when Anushka and I realized, hey, there's two of us. Maybe we need to go do this again. And we bought a second practice that was even less than that in revenue. And then we ramped that up. I think our third practice was a slightly larger practice, which had like maybe $500,000 in revenue. But we were able to ramp that in over the next 2 years. We inherited a team that was in that practice for 30 years and then really started to understand the buy and build model. And then we've done a couple of Denovos after that too. So we've had experience in both acquisitions, smaller acquisitions, as well as startup practices.
So what's easier, Denovo or acquisition? Or neither?
Depends on the day.
Their own, pros and cons, like everything in life. For us, the acquisitions are great because you have a patient base, but I think in dentistry, so many people want to see, they go for the dentist, right? They don't really care about anything else. They're following the dentist. So what we found happens is over time, as the dentist leaves, they have such a great relationship with them that, you're kind of fighting to keep that patient sometimes. And if you keep the team, it makes it a lot easier. If you keep the dentist alongside you for a couple of years, that's even better. But that doesn't always happen. For us, Denovos have been great in that we can start, do a build out, our dream practice, however we want it set up. We're not having to get rid of 30 years of clutter, which has happened to us. So, they both have their pros and cons. Again, with the Denovo, you're not starting off with any patient base, but if you get the right location, we find that it's really great initially.
Yeah, and I can add to that. I think with Denovo is one of the things we've seen is, there is a ramp process of like 6 to 12 months, right? But like the right location, to Anushka's point, and the right doctor, you put them in there, it can become really profitable, right? Like those profit margins can look like high 20s, early 30% range, but it's probably harder to do that when you inherit a team and they have inflated payroll, and it's really hard to like make cost reductions, right? So margin expansion is much harder in those.
So you're based in Chicago. Talk a little bit about, so when you look for acquisitions or you're looking to build out a Denovo, how do you choose a location? Are you able at this point with 6 practices to manage them, so to speak, to kind of be involved, or do you, and how have you built a team to kind of help you out as you scale?
I think great question. Thank you. We actually have a director of operations that we brought on. She's been super awesome. Caitlin's is her name. And I think having the right structure, the right people, we call RPRS. We are also an EOS company. We operate on entrepreneurial operating system. I think that gives us the structure that we need to get to the next stage, or just have the right cadence in terms of weekly meetings. Accountability is huge in the organization too. With the director of operations, we're able to divide and conquer. Like we can play in the recruiting of the doctor side, while she can really recruit on the team, the assistants, the PCAs, we call them patient care ambassadors, our front desk associates, managers. So it's been pretty awesome when you have like the right people surrounding us. Anushka, do you want to add anything to that?
Yeah, I think you had asked Bill about, how do we select the practices? Our processes refined over time. Initially, our first practice that we talked about, it's a 4-op practice. There might be space to expand in the basement. It's definitely a little bit of a tougher build, though. If you asked us now, we wouldn't pick up a 4-hour practice. It just wouldn't happen. So our process has become more refined. We look for very busy areas, lots of foot traffic, and parking. That's something we found out with our second practice. Street parking is very tough. It's tough to get people to want to, park on the street and come in, especially if they're driving around trying to find that parking. So for us, having a parking lot, little things like that. We want to see that the neighborhood is growing. That is the demographic, is a good socioeconomic demographic. Because, for PPO fee for service, we need to make sure that people have insurance and that they can afford their patient portions. So that's just our model. And going back to what Abhishek said, about the leadership team, over time, going from 1 practice to 2 practices wasn't too bad, but going from 2 to 3 threw a wrench in things because now there were more practices than us. Going from 3 to 5 was more of a challenge, adding the 6. And we know that every level we take, like going from now to 10 is one set of problems. Going from 10 to 20 is going to be a completely different set of problems. So we envision our strategy and our leadership team constantly changing over time. Because we run on EOS, we're very clear on our accountability chart. We know what Caitlin's role is. We know what my role is. We know what Abhishek's role is. And as we add more people to the leadership team, I think for us, that's going to be key in scaling, is making sure that we know everybody's accountability.
So this is really interesting. So you're at 6 locations. What, as you start to add 7, 8, like what would be the next role, or who would you kind of add in? Like what people or team would you need to kind of help you as you scale?
Great question. I think we have the structure right now to probably get to 10 practices, maybe 12 locations, right? It's for us, I think we're more focused on organic growth. Anushka and I constantly talk about this. There's 4 levers in growth, as you might know. Number 1 is organic growth, increased price, increased volume, right? Insurance reimbursements are not always possible to get increase in price. That's the area we're really heavily focused on. I think a lot of groups out after COVID, right? Because money is expensive to borrow. Number 2 is margin expansion, reducing costs, really having great partnerships with our vendors, process efficiencies. Number 3 is the buy and build model, right? As we do the buy and build, we've done a little bit of that in the past. Can we buy on larger practices and really get owners excited to come stay on with us? And of course, number 4 is engaging the right consultants in order to get the right best shared practices because of the experience of the consultants. I think we're definitely operating in the first 2. I think we will start to incorporate number 3 and 4 a lot more as we further go along the process.
Great information. So this really leads into the next question that I have here. You talked about organic growth and the importance of that, and I think we've seen in the past, if we go back in time 3 or 4 years ago, it seemed like it was maybe even a couple of years ago, it seemed like the industry was in acquisition mode. Everybody let's buy, we're buying EBITDA. So we're just out there and we're grabbing what we can. And then all of a sudden, I think there was a bit of an acquisition hangover. And of course, interest rates have gone up. And I think in some cases, some groups maybe had overpaid for some groups or maybe bought groups that didn't fit the culture. So now there's a lot of talk about organic growth or same store sales. So you really focused on that. That was like the number one thing you pointed to. How do you go about growing each practice organically? Is it the same at each practice? Are you adding on additional services? Kind of how do you do that?
Yeah, so exactly what you said. We really want our providers to be very highly skilled. We find that if a provider doesn't have the skills, what they'll do is they'll diagnose their skill level. So let's say they can't do endo. They'll tell the patient, let's just pull out the tooth and leave it as is, right? So we've really heavily focused on continuing education and mentorship for our doctors, and true mentorship. I know a couple of them came from past experiences where they were promised mentorship, but they didn't actually get any. That's the first thing. The second thing, we're adding specialists. So we added an oral surgeon recently. All the practices refer to her. We're going to go into things like endo, perio, et cetera, over time, maybe even ortho. So just adding those providers is the first thing. The second thing is making sure we have availability, right? I know we kind of run into this sometimes where we have providers say, well, I want to work 9 to 4, Monday through Thursday. And we tell them, well, that's not realistic. Maybe if you lived in farmland somewhere, it would be more realistic, but in a city, urban area, that's just not realistic. We have to have availability for patients outside of their work hours. Clear financing options. Patients really come to us because we're very, very clear about what options they have. We have financing options for even lower income individuals, which is really great to help them pay their patient portions. Abhishek, is there anything you would like to add?
Yeah, good points, Anushka. I think just talking about expansion of skills, right? I think we want our GPs not to just be GPs. We want them to be super GPs at the end of the day, and really where they can do a lot of procedures in-house, not have to refer out every single thing. That's our main focus right now, is just having long-term aligned doctors where they can have a vision within our vision, within the larger vision, and really nail down those skills so they're not diagnosing to their skill sets, where they can actually do what's best for the patient instead, because now they've got all these tools in their toolkit. That's really the focus. And I also think, I think people are really looking for one-stop shops. I think the world where you start to refer people out for every single thing is over. I think those practices probably struggle a lot more than the ones that can provide comprehensive care under one roof.
So talk a little bit about organic growth. How do you feel, because we're interest rates, and we just heard the Fed may raise them again. So it's a lot of pressure, not just on you, because your cost of the services that you're using, materials goes up, but there's also that pressure on patients, the pressure on the employees that you have there. So how do you maybe from the patient perspective, how do you handle that? Have you seen anything from patients maybe not accepting treatment because of concerns that they can't afford it? Or are there ways of, how do you handle that?
All the above. I think, I think that's real. I think sometimes it feels like we might be in a little bit of a recession just because of, we've been doing this for 10 years now, and you just know when people are not able to afford it, they can't get credit approved because their credits are short. I think having great, how we tackle that is having just awesome financing options. To Anushka's point, even if they're subprime credit scores, can we have the right financing option that'll approve them? Because it doesn't mean they don't have the money to pay on a monthly basis. It just may mean they don't have the money to pay upfront for treatment. So if we can handle some of that. And also on larger treatment plans, right? People sometimes want full mouth care. They need full mouth care. They just have no clue where the money is going to come from. Also having financing options that can finance them on larger payment plans, but really break it down into affordable monthly payments is going to be absolutely huge. And the right training of teams to be able to break it down into, hey, look, this is not an all or nothing. This isn't like if you don't do all of your treatment, we can't do any of it, right? It's not the all or none law. We can break it down. We can do some of it now. We can probably phase treatment, training our doctors to really be able to phase treatment, where we can now do what's really essential and then do some of the other work in like 6 months or 1 year. Or maybe their financial positions will get a little bit better. Anushka, anything you can add to that?
Yeah, kind of going back to debt and how expensive it is. Definitely on the patient side, we've definitely seen an impact. That's just the reality. Even with the financing options, we're seeing fewer patients get approved than we're used to. I'm fully confident that we'll kind of come out of this. I think the key is, you mentioned earlier, groups having taken a lot of debt buying EBITDA. I think that's where the struggle is going to be. We bootstrap a lot, so we use our cash flow to bring on new practices. And we just don't believe in buying EBITDA. So I think just making sure the balance sheets are very strong so that downturns don't affect the practice or the group as much is where we're focusing right now.
I will add, when we do want to buy EBITDA, it's really about alignment with those owner docs to be like, okay, you're coming on their journey with us. This isn't like a one-time flip where you arbitrage your business and walk away into the sunset, right? That's not a thing anymore. I'm sure there's a lot of that too.
So you would call it's more of a partnership model. They're staying on for the long term, and That's great. So are you still looking for partners, the right fit? I mean, is that something that makes sense in your model? And you talked about focused on organic growth, but the right partner is out there in your market. You'd want to have a conversation with them.
Absolutely. We always want to have conversations with people. We love meeting people and talking to them and, seeing what their vision is. We on EOS, we have core values, we have a core focus. If we can find partners, whether it's associates who want to come on board and eventually partner, or even dentists that are maybe tired of the day-to-day grind and having to do the hiring, the recruiting, and manage all the HR stuff and payroll, etc. Those are definitely the people we'd love to talk to.
It's just lonely out there just to be able to do it all by yourself, right? I think collaborating with the right people is definitely the way forward.
It's certainly it's the trend that we see, right? From solo to whether it's multi-site or even a single large group practice with doctors working together, looking for whether it's that mentorship, the education. It's things have certainly changed in the dental industry, and it's I don't think it's going to go back. I can't imagine, especially with costs, and I think some of it's generational as well. So it's pretty fascinating, kind of the changes out there. That really kind of this idea of whether it's an associate that might want to partner with you. Let's talk a little bit about that. So recruitment and retention, it was like a huge issue during COVID, and it seems to have really kind of continued on, maybe not as big of a challenge as it was then. So can you talk a little bit about how you handle that? I think we talk about recruitment as always an issue, but how do you retain people? Because sometimes that's almost like overlooked, and to me it makes sense that it's much easier to keep somebody happy and retain them versus going out and finding somebody new. So can we maybe focus on retention a little bit, and then we can talk about recruitment challenges?
Yeah. So definitely. I mean, this is one of my favorite things to talk about, because I think, what people do, what we've noticed is, instead of recruiting someone and then realizing they're not the right fit, we kind of go to square one and find out, are they the right fit? Do they fit our core values? Is this someone we can envision working with long term, right? We don't just want to bring on a doctor just for the sake of having a doctor and filling a role. We really want to make sure that they fit all of our core values. And it's worked great so far. In the last 4 years, we've turned over one doctor. And in hindsight, probably was not the best core values fit. All of our car doctors are awesome. Their core values fits. They understand the vision of the company. They're very aligned. We're very, very big, like I said earlier, on mentorship. We provide continuing education to them. And some of them, having come from other companies where they were promised this is all new to them. They are seeing that we're not just talking, we're actually walking the walk. So that's very key, keeping them engaged. So we do check-ins, our managers do check-ins with them weekly, what's working, what's not working. The two of us personally will do check-ins with them every quarter and ask them how we're doing. What can we do to support them? So I think that's been really instrumental in helping us retain doctors.
Yeah, and if I can add to that, I think when Anushka talked about quarterly check-ins, we are very open and honest with our doctors. We ask them, do you think you're growing into the organization, growing up, or growing out of the organization, right? It's important to know that. And when we facilitate open and honest conversations, our associates will tell us, like, they think that they're growing in and up. We've had one doctor, like the Anushka was talking about, she was clearly growing out of the company, but we got ahead of it. We were able to recruit a replacement doctor who was excited to be here. I think alignment is key when we even recruit doctors. I think we do say no to about 8 out of 10 candidates. So it's a lot of doctor interviewing that we do, but it's like really the long-term fit. Those two people that they're really here to stay, they're really here to get better, they're really here to make a great income and be a part of the greater good of the business.
Yeah.
So as we kind of move on from recruitment and retention, let's talk about what seems like something that's been talked about in the industry for 4 or 5 years. Everybody gets kind of excited about it. I think last year was, or maybe it's this year, the year of AI, right? So everybody talks about technologies, and how we can, in challenging times, you're looking for obviously that organic growth, as you scale up, though, you can also leverage things like technology. You talked a little bit about, financing options, and some of that lends itself to technology, like easier ways for patients to get approval. Do you use any AI? Are there any interesting technologies? Cone beam. What are you using out there that gets you excited? And maybe what are you kind of exploring, like some technologies that you're trying out?
Definitely yes to cone beam, yes to scanners, digital scanners. Not every practice of ours will have it. It just depends on where the skill level of the doctor is, right? Some of our practices are younger. We want the practices to ramp before we can invest in a lot of technology, right? But yeah, generally I would say baseline is having a cone beam, having a scanner. AI, to your point, I think someone like a Videa, I think statistically speaking, I think dentists underdiagnosed. They don't overtreat or overdiagnose, right? I think the statistic is like huge. 60-something% of dentists actually underdiagnose. Having something like Videa Health with AI in our x-rays is crucial. We're actually going through into that progression in the next quarter. We're going to be onboarding AI. We also are migrating into cloud right now. I think where doctors are able to where there's easy assimilation between the practices, patients can exchange and still not have to create new charts. So there's a lot of technology we are embracing. We're actually currently in the middle of it. Anything that, Anushka, that I haven't been able to think of?
No, I think you pretty much got it all. Anything that we can do to make things easier, even like analytic software, right? Even though we are going to the cloud and they run reports, we still are paying for an external or built an analytics software where we can pull all of the data and have the KPIs at the tip of our fingers. And again, anything just to reduce human error and people having to make multiple clicks or having to figure out how to diagnose something when we just have it kind of on the screen that this is a cavity. Let's do something about it. That's what we're looking for in the future.
So as we start to wrap up this podcast here, I always ask this question. Maybe this is a two-parter. So as we talk about the future of Areo Dental Group, maybe short-term future. So what are your plans? You talked about organic growth, but what are we looking to do in the next couple of years, and then what are you looking to do long-term with the organization? Big question.
Short term, I think 2 years, we're focused on continuing to grow organically, bring on a lot more doctors. We brought on 5 new doctors in the last 2 quarters, right? We're going to continue to do that because our practices do have the capability. Our chairs do need to be optimized more. That's what we're focused on, but we're also looking for the right opportunities to buy and build. If there is, we're not opposed to buying EBITDA, but it just has to be the right EBITDA with the right ownership behind it. We're going to continue to be opportunistic in that sense. Anushka, maybe you want to take the long-term vision?
Yeah, so our long-term vision keeps changing. When we first started on EOS, we said we wanted to have 50 practices in 10 years. The thing is, you had mentioned earlier, Bill, that everything's consolidating, right? And it's just going to be harder to us unless you really stand out as a single practice dentist to kind of stay afloat. Again, unless you have skills beyond what the people surrounding you do. So for us, we really see it as partnerships going forward and helping dentists be in charge of dentistry. We want to keep dentists at the forefront and keep their autonomy. And I know a lot of people talk about that, but the two of us being dentists strongly believe in that. But we also don't want to be left behind as dentists while all the other groups are kind of, figuring their way ahead, because this is a reality and we either have to accept it or fail.
So I guess the last question is if there are any audience members that might be, whether they're potential associates or potential doctor partners that have existing practices, how do they contact you? What's the best way to reach both of you or one of you? Who handles that?
So Caitlin generally takes the intake, and then we'll do the interviewing after that. However, areodental.com is our website. My email is dr.g@areodental.com. So it's dr.g@areodental.com. And then Dr. Raj is dr.raj@areodental.com. So we'd love to talk to anybody who's interested.
And you can also send an email at contact@areodental.com. That'll come out to us too.
Well, that's great. I'll make sure that we drop those email addresses and your website URL in the show notes so everybody can reach out. Dr. G and Dr. Raj, really appreciate you sharing your wisdom with us and your journey. It's some great info. Not every dental group would share what you shared with our audience, so we do appreciate you doing that today. And thank you both for your time, and thanks everybody for watching or listening in today. This is the Group Dentistry Now Show. Until next time.
The Group Dentistry Now Show has listeners across North and South America, Europe, Asia, and Australia. If you like our show, subscribe today, and please tell your colleagues about us.